live for This Week in Business this week, and we have Anthony and Kingsley today. How are you guys going?
Awesome. Who could not be good this time of the year?
I know, it's very Christmassy all of a sudden.
It is. It is.
Have you got your Christmas trees up? Have people done the Christmas tree thing? No. I went and cut a Christmas tree down from a local business the other day.
Are they looking for their tree? I wonder what happened to it?
No, I mean, like, they sell Christmas trees at this time of the year, guys.
Don't know if I should mention this on camera, but we've always provided the community service by going and trimming any introduced species in the national park next to the pine plantation. So just cleaning those up.
That's a good community service. I help fund someone's retirement, so I feel good about that too.
That's very good. That's very good. Yes.
All right, who wants to go first this week?
Look, I'm going to jump onto something which you mentioned this morning. You've been online looking at purchasing things recently, Louise. Yeah,
I've been buying. I do some gift buying for some of my clients, for their clients, like as a bit of a service of my business. And as I've been on some of these websites, every single one of them, there are pop-ups. They all want me to subscribe to their newsletter instantly the moment I get on their website before I know anything about them. Tell me, is it good or bad practice to do this?
You remember when you were younger and you used to go out to a nightclub and 15 guys would walk up to you and say, "Would you like a drink?" Used to happen to you all the time, I'm sure.
I used to always say yes.
It never happened to me. But I feel like that's exactly the same kind of thing as a quick pop-up on a website. You've got no opportunity to explore or feel the brand before the first thing they're saying is, "Look, can you make a lifelong commitment to get emails from me until such a time as you feel like getting those?" And you just, like in the real world, wouldn't do it. You wouldn't, ask somebody the first thing you've met when you've walked into them at a networking event. The first thing is like, "Oh, can I sign you up for my newsletter for the rest of your life?" And you're like, "No." So the first thing, I guess, you've hit the nail on the head there. Pop-ups are really annoying and they detract from the user experience. Google have switched onto this, and it's actually one of the signals which they bring into their ranking factors. If your pop-ups are obtrusive or particularly damaging to the user's experience of your website, they will downrank your page relative to other pages. So just bear that in mind.
Wow.
Now, there's a huge reason people have pop-ups on their website, though, which is it's a quick and easy way of building up subscribers in your mailing list, because we all know the more people you've got on your mailing list, the more people are going to be engaged with you and buy with stuff, right? No. You want to have people on your mailing list who want to be on your mailing list, and that's your first mistake, is looking at it and saying, well, everyone who visits a website is a possible customer. So we always advocate, if you're going to use pop-ups to build a mailing list, wait till the person's been on the page for maybe 60 seconds. First of all, filter out anyone who you're going to annoy. Put them in a position on the page where when they're thoroughly engaged, so maybe at the bottom of it, if you've got a 3,000 word blog article, right down the very bottom of the article, if you've got to that point, then the chances are they're interested in what you've got to say. And only ask them the very minimum in the first question and treat their subscription with respect. Don't just add them to your mailing list and blast them out every offer you've got. Add them to the list and find out the kind of things they're interested in. Follow up with an email, engage them, work out what stuff they're interested in, what stuff they're not, and then segment them according to it. But just collecting, crap off people, email addresses off the list of the website at the first go, to me, it feels like back in the nasty days of the internet around sort of 97, 98, when you visit a website and pop-ups would come up all over, and you'd shut down the page and the thing's still putting pop-ups. There might still be corners of the internet that happens, but in polite
maybe that's why I find them so annoying, is that I'm traumatized from the 90s and the early 2000s where pop-ups were just everywhere.
Yes, yeah, no, that's it. Look, it's a useful tool, but it's certainly one that is a lazy and bad user experience one, and the search engines and to a lesser extent Facebook really are trying to, phase out that overt pop-up. One of the big pop-ups we saw a couple of years back now with the introduction of the GDPR requirements in Europe were that, do you accept our cookies pop-ups? And you still see those on some European websites. And even those, Google will actually rank you down and, detract from your ranking on those if you have to have them there.
Well, that is very interesting. I did not know that Google downgrades you in ranking for these things. This makes me feel better. I should stop Googling random things to buy for clients and do the things at the top of the list, not at the bottom for them.
It's a great thing to be doing at the moment, though, and I've certainly one of my daughters works at a local business, and they've got a $20 Secret Santa. But the only catch is you must spend that $20 at a local business. And I thought, what a fantastic initiative to kind of keep that money traveling around locally as a business. And I think that's something that we could all, perhaps advocate there, is when you're buying these little gifts, local businesses have got so much to offer.
Yeah, we are, for this client specifically, we actually bought gift vouchers she has people all across Australia, and we bought gift vouchers for businesses that were physically located close. So they're all small businesses that we were able to purchase from, which was very enjoyable to be a part of, but man, the pop-ups annoyed me. So Kingsley, you've just been on holidays and you discovered something interesting in the marketing world while you were on holidays.
Yes, I found it interesting that, certainly in Exmouth, that many sort of touristy oriented businesses only had Facebook pages and not websites for marketing their business, which to this accountant at least I found a little bit curious, and I was just interested to hear what Anthony thought of the merits or cons of that strategy, or lack of a strategy, I suspect, and get his views.
I guess it's one of those things where, often in business we're doing the things which we have to do on a day-to-day basis, and sometimes thinking a little bit further ahead and looking it out of the customer's eyes is maybe not what we're able to do every day. And a lot of businesses do this because it's quick and easy, or quick and dirty is perhaps another better description of it. But the big question for you, Kingsley, when you were looking for these experiences, as a customer, how did that influence as a trust signal for you? Did they look like somebody who'd been around and was going to be around for a while, or did they look perhaps a little bit fly-by-nighty?
Yeah, it does give that sense that sort of, I can think of one in particular where it did, I wasn't looking for it. Some of these posts are a bit old, and does it even exist? And,
And that is the dilemma for anyone using Facebook in this space, is you have to be, almost up to the week with stuff. If that's your primary form of communication, saying that, yep, we're still in business, you need to be, showing that you're still in business with it, and posting on a fairly regular basis with it, with up to the minute things. These were tour experiences, I'm guessing.
Yeah, and hiring things and so forth. And I guess you're right when I think about it too, because the tourists are, almost in every single instance not from Exmouth. So Bob from Exmouth may well know that Frank's business is real and he's been there for 5 years, but Kingsley from Capel has no idea about that. And as you say, so if it's just the Facebook page, it's don't know, they want a deposit, not so keen about paying a deposit for something that may or may not be. Particularly
post-COVID, we know there's been a bit of a shakeout. We know a lot of businesses aren't there anymore. And if they've got a Facebook page which you look on and there's tumbleweed blowing around on it, it kind of makes you question, did they make it or not? I'm not sure. We'll have a look for somebody else who's got some more credibility there. So it's a useful resource, but these days, realistically, for a couple of $100 and a few hours effort, you can have a web page that you've done up yourself on, even on a basic platform that you can put something together fairly quickly. And really, maybe for $1,000, you can have somebody professional put it together for you and have a starting point there.
Oh, right. That's good. I actually do the opposite of that, to be honest, as a bit of a younger generation person, is that I sometimes, especially post-COVID, I look for websites and then I go and check their Facebook to see their activity. And if they've not been active anytime in the last 2 months or last month, I'm not buying from them. I just can't trust that they're a real business.
You need both. Yeah. They're all trust signals, aren't they?
Yeah. It's all about knowing that they're actually there, especially post-COVID. Now, Kingsley, you want to talk about serious accounting things. It's Christmas, like.
Yeah, well, that's right. It's,
let's talk about Christmas parties, but no, let's talk about serious.
Can't buy any presents, the accountant said. That's why no one rings me at this time of the year. Scared of what I'll tell them. But I just like to sort of encourage people, because there's still a truckload of people that, despite the fact they're on their MyObs or their Xeros or their QuickBooks or whatever else, and they've been entering all their data properly through the year, doing their best, reconciling their bank accounts, either just don't know where or how or can't or whatever, but very rarely will bring up their profit and losses and actually have a look. And, December, of course, is depending on which way you want to look at it, it's either a half year or we're nearly there, a half year to see how you're going. Or if you want to look at a calendar year, you can look at a full calendar year's figures. And there's nothing wrong with, as much as we operate, tax-wise on a financial year, June to July, compare a calendar year to a calendar year. There's nothing wrong with that. It's still still an apples on apples comparison. So it's still useful, gets you all the same useful operational sort of information. Maybe it's not going to tell you what your tax bill is going to be, but it is telling you how your business is going. So it's just one of those natural points in time where if you haven't been doing it in recent times, I really strongly suggest you go and do those reports, because it's just a couple of clicks of a couple of buttons in your program and you've got it. And the one that I particularly like, and they all will do it, you might have to poke around a little bit to find it in each program, but the ones that will put each month next to it. So if you're going to do the calendar year one, you've got a column for January, column for February, column for March, and so forth. Because then you can see the story for the year. And of course, this has been quite a year for a story, but you can see how your business went through the year. And it will also show, well, hang on, why was fuel twice as much in April as what it was in May, or vice versa, and those sorts of things. And sometimes picks up just plain old input errors, and you can fix them. But seeing the data chopped up into the little bits will enable you to understand it heaps better as to whether you've paid too much or you didn't get some money in, or whatever the case may be. And it's just a very, very simple thing to do. I like to get the ruler out and just go down the page and just moving through the expense section in particular and just seeing what's up and down month by month. Extremely simple. It's just basic arithmetic we all got taught in primary school. You don't need to be a genius. And it just yields up often some really interesting stuff for a very, very simple exercise. So, that's just my simple little thing to encourage people to do.
So what are some of the things we should be really looking for in this, Kingsley? Obviously anomalies as you go through it.
Yeah.
The last quarter or for the quarter that we're in at the moment, you won't have had your, most businesses won't have had their JobKeeper incomes coming
That's
through.
Right.
So we've got a useful point of reference, the December quarter 2020 versus 2019. What else?
And even with that, Anthony, in a sense, the vast majority of people I'm seeing, they have coded Cashflow Boost and JobKeeper out in separate codes. So it is comparatively easy. You could say, revenue's up 40 grand on last year, but hang on, we got 30 grand in Cashflow Boost or something, and you can quickly add it back to get it back to an apples on apples situation. So you can do those things, check your margins, that sort of thing. I just find, and particularly doing the apples and apples this time last year comparison, because budgets are obviously very, very useful things to do, but you're comparing against a guess into the future, which will hopefully, built on fairly good commercial logic and whatever else, but it's not quite as hard, tangible a comparison as this year's actual figures to the same time last year's actual figures. And then if it's different, then of course, why is it different? Whether it be up or down. And hopefully you know the answer, but if you don't, particularly if it's a material number, is to go digging. And I suppose the other thing too in those sorts of exercises too is not to necessarily spend all day mooning over the figures, is to do the old, key performance indicator thing, in a sense that, bank fees could have jumped 30%. And that's so probably that still should warrant a bit of a phone call to the bank. But wages might have only jumped 5% and wiped out half your profit. So particularly focus on the really big costs in your business. How much have they moved? Because if they've only moved even a little bit, the effect could even be catastrophic. So you've got to keep a close eye on those. And if you start to do this exercise, you will start to see the patterns. You'll start to see my wages is typically about 33% of revenue, or whatever the number is. And so once you've done it a few times, if it jumps up to 36, and why did that happen? Or, those sorts of things. Other things to watch out for, wages as a classic, is for many businesses, probably fortnightly pays. You're going to hit some months where there's 3 pays in a month. Probably should put up 3 fingers, shouldn't I, when I'm saying 3? And so you sort of, whoa, what the hell happened in whatever? Well, it's because, 3 Thursdays landed in the month, and you've really sort of got next month's pay sitting in this one. So, adjust for those things. And it's just seeing those things and then just sit back, ask it, why did that happen? And often it's just very simple things like that, 3 pays or whatever it is. But do this fairly regularly. You'll start to really, really understand your business and what the relationships, if I make this much revenue, I'm typically going to spend this much on that expense, and start to really understand your business.
And what if you've been in business for less than a year, and so you don't have a year to compare against? Because we do have some subscribers who are fairly new into business.
Yes. I mean, again,
do you compare against months on months, or?
I guess I just did the proviso there, I suppose, is again, like for argument's sake, let's say you're going to compare November to October, just being those 2 months, you haven't been in business. Say let's come to business in July. Probably a fairly brave person to have done that, but some people did. You do hit the problems though with when you're comparing quite short time frames, that there is some real outliery thing in there that really blows it out of the water, good or bad. So if November's much worse than October or vice versa or something, certainly look at it, certainly analyse it, but don't go and slash your wrists because it could be a very short term outliery sort of thing. You need at least, so that in that case, often doing the rolling averages is a good idea. Say 3 months typically at least, so that you're comparing November to an average of the preceding 3 months, and just take some of that outliery variability out of it, and you're probably not drawing a incorrect conclusion on just too small a data set. But outside of that, you're right, in the sense you're stuck a little bit. You just simply don't have enough data to compare. But there is a few things like that you can do to fill the gap reasonably well.
It's really all about the details, isn't it? When you kind of get down to the bottom of it. We did this at the beginning of the COVID thing, and I think most established businesses really went into their cost base and they pulled out a report on all of their places they were spending money. One of the ones that we found over the previous 3 or 4 years that had just been creeping up was international transfer fees with our banks. We came back, had a look at it and said, well, why don't we move all of our credit card payments for offshore services, things like Google, which are billing us out of Ireland for AdWords, to a third-party service we use TransferWise, and I've noticed an annual saving of about $800 a year just in that one bank fee, which is fantastic. But you kind of look at these expenses across the country, across your business, and when you get down to those little details, and you can see particularly a trend heading in a particular direction, you can act on it, and it's worth getting that line, as you say, line by line by line reference on it, and see where your surprises are.
Yeah, that's right. And it's pick up 3 or 4 of those things. It's only talking a couple of $1,000 for the sake of going down the page of a ruler. And
you put that back onto a marketing side, which is, I guess, my area. if you're running a business with a set margin in it, let's say you're running at a 5% margin, $1,000 that you find in savings is equivalent to, what's that, $20,000 in revenue that you'd have to make to do that. So yeah, definitely worth having a look at these costs and finding those opportunities as well.
Yeah.
Fantastic, guys. Well, that is This Week in Business. Do you have, guys, anything else you want to add in today?
That's me done.
No, perfect. All right.
20 minutes and 32 seconds. We've really exhausted our friendship today, but thank you.
Thank you for bearing with us. Thank you for bearing with us today. Lots of important information in there. We've got that tagged into the stuff. We did mention last week that we would talk about Wave, but we're not going to talk about that today. We'll talk about that next week. So if you are a Wave user, please join us next week when we'll talk about that in a bit more detail. All right. Thanks, guys, and we'll talk to you soon.
Very good. Bye.